Okay. Can we go on? Let,
Yes, sir.
let's let's continue. Okay, let's move on. I'm trying to see if I have other people joining so I can add them. Um, Gabriel and can you guys type into the group and ask them that we are on the Zoom? They should use the link. Okay, let's move on. So,
Okay.
so what I'm trying to say is that this large movement, okay, this large movement from here to this point, from 2,955 to 3,520 502 price, it shows the footprint or the behavior of institutional traders or the smart people. The moment you see this large move or big impulsive move happen, it should tell you that the big boys are involved in the market now. So if you were not able to join them as price did that big run to the upside, you should now wait for them, okay, when they
Mm.
give opportunity for more participation, okay, because the institutional people, when they make the move, some of the orders will be left, okay. The move will be very large to the extent that there will be price have to come back to collect left orders. Okay. Another concept also is that when they make the big move, they would always want to give opportunity. For example, and this is where we will use the Fibonacci tool. So, for example, from this price, 2,955 to 3,502, this price here, when you see the institutional traders, their footprint, and you measure on the fib, they will always push price back down into discount. Anything discount is when price is below 50%, 50% down to 100. This in this case, they pushed the price back to 61.8%, and boom, the breakout happened. And look at how it moved very big to the upside. So, but how did they start? Institutional footprint or the big boys announced their presence first before the big move itself happened. Are you guys with me?
Yes, sir.
Yes. So the big boys announced their presence, pushed price up. Price entered into a state of, we can call this thing that happening here as consolidation, but we can also call it exhaustion. It entered into a state of exhaustion. It slowed down a bit, and sometimes the the longer it takes for the exhaustion will determine how far the breakout will go when it happens. If you get a small exhaustion or consolidation, okay, the breakout or the move might not be big like that. And I'm not saying it will happen always. But if it consolidates for a long time or go into a state of exhaustion for a long time, the breakout will be very, very big because they took a long time to rest.
Mhm.
You took a long, so, and if you get enough rest, you have more energy to move on. So, in the concept of auction, we saw that participants in gold were willing to place to buy price up to this level. Then, when the institutional traders saw that, they placed large orders at this price level, 2,955. Price has no option than to come and pick up their orders. Okay, then that's what it did. It came back to pick their orders. How do we know institutions are involved here? Because they left their footprints. The move to the upside from here was impulsive. This means large sums of money entered into the market. This is where you see 100 lot size on gold, 200 lot size. You see people with 10
Mm.
million balance, 10 million or maybe $20 million capital, and they are putting 500,000 lot size. This was,
Excuse me, sir. I've not understood how do we, that the reason why how we know that uh, they will come back here.
yes. So one, when so there are two things. The
Mm,
algorithm, or it has been built already that this pair should go be on an uptrend in
mhm,
during this particular time. Let's say this year, okay,
mhm,
2025. Let me show you something. So let me go to the 12-month time frame. Let me go to the monthly time frame. So on the monthly time frame, um, look at the monthly time frame. So from
mhm,
this point here to up to here, this is the whole of 2025.
mhm,
It's just one candle and it is pointing
mhm,
up. So meaning that the whole of 2025 gold price has been increasing, going up, 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 up in the auction.
mhm, mhm,
Okay. But last year would give us the idea whether it was going to go up this year or not, based on the based on what happened last year. So last year the candle was bullish. This one,
mhm,
okay, the candle was bullish. This one. So if you look at this, and if we take on this 12 months time frame, we can see the previous highs here. The highs
mhm,
were tested, price retraced to fill this area, this area. We can see a doji, which is indecision, and
mhm,
price break up. So in the last 3 years, let's say in the last 3 years, we are having one bullish, bullish, bullish. Okay, so for 3 years now, gold, after breaking out of this high, retesting this one, we are bullish. Okay, so
mhm,
from here, if you that is why I said in the fight, if you are using the higher time frame to see the performance of the participant in the fight, you will have more insight, foresight, and oversight about the behavior of the market than someone who is using a 4 hour time period to monitor the fight or the market. Okay, so it is important to always be looking at the higher time frame to see the way things are happening in the market. Okay, so if you are using the 1 year or 12-month time frame, you could see that in last 3 years the buyers won because Last 3 years closed on a bullish candle. Last year also closed on a bullish candle. And that set the pace for this year to continue being bullish. And the whole of this year is this candle here, from down here, big, up to up here so far. Okay. So, I'm coming back to the question you asked. How did we know that the institutions are going to take part of this? If you are a bank or you are someone who has 10 million or 50 million dollar capital or hundreds of millions of dollars of capital to trade like the institutions, and you are seeing that the people are willing to buy gold, okay, people are willing to buy the auctioning of gold, the behavior is that it is increasing, value is increasing. What will you do? Won't you find an opportunity to also put
To
large
enter.
sums of money in it, invest in it?
Yes.
That is it. You're willing. So, looking from the 12-month time frame alone, the institutions will see that gold up to last year ending is likely to go up. Okay, so let me put this at this place. Ended here. Last year ended here. And then let's go to the 6-month time frame. If you are monitoring the chart on the 6 months, this is the way it looks. Okay, so if you look at the 6 months too, you can see that gold is bullish. People are still willing to buy. Let's go to 3 months. 3 months is still up. People are still willing to buy. Now, let's go to 1 month, 1 day. This is 1 week. Yes, let's go to 1 week. We can see that still from here on the weekly time frame, participants are involved looking for buys, pushing price up, up, up. Okay. Now, so if you see this happening, all you look for is opportunity to also get involved. And this is the daily time frame. This is the daily time frame. So from this point here that we marked on the daily time frame to this point here, okay, we can see that from here there was a previous high point price here, and we got price dropping to make this low, and from this low we get a new high at this point. From this new high, this range, everyone can see that from the higher time frames, we could see that the people wants to place more money into gold, invest more money in gold. But what is the structure? What is the footprint? What is the behavior of what is happening? So we have to look for the right moment or the right point to get involved. If the institutions look at it, they can realize that within this range, there is a break of a previous high, which somebody had called break of structure. So the structure of the market is showing that we should have a bullish market. And therefore, once we got this high, price dropped back into. So if I measure from this low to this high, this is a six, this is a 61.8% retracement. Okay. And I already told you the institutions will want to participate in the market. If it's a bullish market, they want to participate at a discount price. Anything, anything below 50%. Gabriel, are you asking a question or what? The institutions will want to participate in the market at a discount price. So if you measure using the fib, you see that price dropped straight into 61.8%. And it is at this point that they placed their large sums of money. And why do we know that it is a large sum of money? We know because from this point, we can see a very big, you see this candle, green candle, green candle, green candle, like three on a row. That is an impulse. That means that price did not struggle at all. And anytime price taps into a large order, that reaction will happen. So this is what tells us that there were the hands or the footprints or the activity of institutions in the market. And what I'm saying is that the moment you see this happen, you should know that they want to take price to the next level. Now, let's go back to our PPT. I think we've stayed here for a long time. Any question before we go back?
Yes, I'm asking that now that we've seen those three candles for the 3 years, from this 2025, is there a possibility for us to know if price is going to continue in 2026 rising or how is going to drop?
So
How do we know
that
the movement of price in 2026 now if we take 12 months time frame?
that I can say that nobody can tell. Okay? Nobody can tell. Only those who created the market know that, let's say they want to push price to 6,000, gold price to 6,000. Okay? And they know that they want gold price to get to 6,000 or 5,000. They know. But what we can say is that we know that institutions are involved in the buying, in making gold go up. Institutions are involved, and institutions are those who have the large sums of money, okay, to make gold keep going up like that. And we can also look at the behavior, okay, the structure, the pattern that is on gold to determine whether it's going to keep going up or not. So, what I would say is that anytime there is a big move like this, there should always be an opportunity for some kind of exhaustion or retracement or pullback. So if this year's candle closes before the next year candle, the whole of 2026 candle, whether that candle is going to move to 6,000 or 7,000, I cannot say. But what I do know is that, or I do know based on the things I've been learning and what I'm trying to teach you now, is that when the market is splinting, or in a fight, when you are in charge, you get to a point you will definitely get tired and you must rest. There should be an exhaustion or range or consolidation. Does that answer your question?
It answers, but do we know the level at which it is going to get tired to go up?
I can't tell.
Okay.
I can't tell the price, the exact price at
Then if we were analyzing to enter, what are we going to do?
right now, from where we are, from the class we are doing, we are not at the point where we
Okay.
have not, we have not gone through all the things we need in order
Okay,
to
okay.
analyze and enter trade now. We are only getting us ready
Okay, sir. Thank you.
at this point. You get it?
Yes, sir.
So based on all that, I will not be able to. If I am analyzing the market personally, I might have some thoughts as to what I expect. But based on our class, we are not
Since we
at
are not
that point.
reached there.
Yes,
I've understood.
and
Thank
at
you.
that point yet. But I would say that looking at how this year's candle has performed, going bullish, we should expect some, even if it will continue going up, next year's candle must be bearish a bit before
Mm-hmm.
it continues
Can
to go
continue.
up, which means I'm expecting a retracement or a sell pullback, okay,
Okay, sir. Thank you.
before the buys will continue. Okay, good. So let's move on, let's move on. This is the daily time frame. So what all I have done right now is to try as much as I can to explain to us that the market is like a fight. And anytime we want to see one side dominating, and the example on gold right now, we can see the buyers are dominating. Okay, is that right? Did you all get that?
Yes, sir.
And the other thing is, at a point too, even if you are dominating, you should be resting. And we are also seeing that there is range, there are pullbacks, there are exhaustions happening in the market. But that doesn't change the fact that the buyers are in charge or the buyers are dominating. And what you want to do as a trader is always trade according to who is in charge. But that doesn't mean that buyers are in charge. So just click on buy at any price or any point. No, you must look for places where it is likely that the institutional or smart people will be active so that you can now move with them. Is what I'm saying making sense? Is it making
Yes, sir.
sense? Perfect.
Yes.
Perfect. So let's move on with our PPT. Then we can get back to the chart. So this fight can be framed into the concept of auction. Now, the concept of auction thrives on participants' willingness to buy or not sell at certain levels of prices within certain time periods. Okay. So willingness of participant to buy within the 12-month time frame, 1 year. We can see on the example on gold that participants, both retailers and institutions, have have shown their willingness to keep to buys on gold for the last 12 months based on the how the candle is showing on gold. I hope you all saw that. So that is auction. They keep pushing the price up, 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 price increasing. But it will get to a particular price that nobody will be willing to buy again. And at that point, the market must correct. It will drop back to a certain level or price. And before it will go up and start increasing again. And those are the points that I call exhaustion, retracement, pullbacks. Are we okay? Are we okay?
Yes, bro.
Very okay, sir.
Okay, now let's dive into the auction theory. The auction theory states that, and you can take a screenshot of the screen and read it to yourself if you want. The auction theory states that markets function as a continuous two-way auctions in which participants bid or offer until a price value is discovered, accepted, rejected, or rebalanced. So listen to the terms. Participants keep interacting. Okay, they keep making decisions. Okay, up, down, buy, sell, fight. Okay, punch me, I punch you, punch me, I punch you, till there is a consensus. Okay, till value is discovered or is accepted or is either rejected or rebalanced. Now, what is the meaning of the balance? Balance in the market is also known as value or fair value gap, valuation. So that is a state where supply and demand are relatively equal and price spends significant amount of time, maybe sometimes close or over 70% of the time duration or session or season in that value area. So we can also refer to that balance price or that range as times when the market is kind of accumulating. Okay, because when we talk of supply demand, then it means that demand is when buyers will make decisions or will be active, and supply is where sellers will be active. It means we have a ceiling and we have a platform, up and down, a range, and price is moving up, down within that. And at a point, price must break either the supply, invalidate the supply, or invalidate the demand. Okay, price must either overcome the supply or overcome the demand. Okay, price must break to the upside or break to the downside. The moment that happens, price has to now rebalance. Okay, if price breaks, let's say the supply breaks to the upside and it is accepted, that's good. But if it is rejected, it means that if it breaks a supply and it is rejected, it means people are not willing to keep buying. So it must rebalance, come back to the value, the consolidation, the accumulation. It must come back. Okay. So this concept might take some time for you to grasp, but if you come to understand it, it is going to help you. Now, imbalance, drive, initiative. This is a state where one side, either the buyers or sellers, dominate. So, initiation is when buying activity is dominating or selling activity is dominating. And once that happens, price will move rapidly away from a prior range. And oftentimes it will leave a gap or a fair value gap. And rebalancing or redistribution after price has moved and created the value gap or imbalance, the market will often have to return to the value area and establish reparticipation. This is exactly what we saw or I showed you on gold. This is exactly what I showed you here. Okay. So price was here. We got, we have like a supply area up here and we have demand area down here. Price succeeded in breaking the supply and went up. Then, when price was accepted that it should now be above the supply, it went up and dropped back into to rebalance, establish reparticipation at this level where the supply was. So, in this sense, we can say the supply which was supposed to take price to sell, because it was invalidated or broken, it has now turned to become demand, and then establishing rate participation. And that's exactly where the institutional traders identified and they placed their large order. And that moved the price up. So the same thing that happened here is happening here again. There is a supply zone here. The supply gets invalidated, okay? And then it was accepted. Now, the acceptance means that it breaks structure. For it not to be accepted, and also you can see the large candle, okay, the activity, okay, the buying pressure was high, which means the supply was accepted by the participants of the market. The price breaking the supply was accepted. Price would often have to drop back into the value area, which is the supply, use it as demand, and establish reparticipation. Boom, upside again. Price never comes back there. Boom, breaks. Now, we can see price breaks another supply zone and goes up. My question is price going to re-establish participation again? In other words, is price going to come back to this place again? That's the question I'm asking all of you right now. Hello?
Yes, sir.
Yes. Answer me. Do you think, based on the concept we are learning now, because supply is taken out impulsively, price goes up, it is accepted. Is it going to drop back to give chance for people to buy again?
That's when we don't know.
Good. So that's why,
Yeah,
Yes, I suppose that.
okay, what do you say?
suppose.
It's supposed to do
I
so.
said it's supposed
Yes.
Why? Why?
because this is a rising wedge. It's a rising wedge, and you need to give a balanced imposement before rocketing. Before we have a
Hmm? Again,
I
I'm not
think
understand.
patient did not hear what you said.
Mm-hmm.
Can you come again? I think his network or
His network is not too good
okay,
because at times he complained that the screen is blank.
okay. Miss Joe, are you with us? Are you catching what we are trying to say? Are we getting somewhere? Joe, are you there? Okay. But patience, are you getting the concept now?
No, that why is it? Do we think he will come back to the support zone? I'm
Yeah,
not
why do
understand.
we think? Why? Because the same concept that I'm explaining now. Price
Mm-hmm.
is able to price. We saw that price broke out of the value, broke out of the supply. It came back
Mm-hmm.
there and then it went up. So now that it has broken out of another supply, we should likely expect it to come back there and go.
Mm-hmm.
Do you get it?
um,
Yes.
I
Mm-hmm.
yeah, my network chip up.
Okay. Yeah. So that is an expectation we should have. Okay. It's an expectation we
Okay.
should have. That's the way the market is. And if you
Mm-hmm.
have to be strong to have that expectation and be willing to risk on it, because the whole market is about you bidding or betting on an educated guess. based on
I'm correct.
uh-huh.
I guess I'm correct.
Yes.
I guess I'm correct.
Yes.
Thanks, boss.
Yes. Okay. So that is just an example, and we will keep explaining this theory or concept throughout so that all of you will understand, we'll all be on the same page. Because without this, some of these thoughts, when you are using support, resistance, demand, supply, you might not understand why. And when they fail, you might not also understand why they fail. That's not good.
Mm-hmm.
You should have understanding of what you're doing so that even if it fails, you know why it failed.
Okay.
Okay, good. Now, the important variables in auction theory are price, time, and volume, momentum. I will explain these three things more. We need price, we need particular time or time frame or duration, and there must be momentum, volume. Okay, that is important for auction theory when we want to apply it into the market. Good. So from this theory, we can understand that market, there is interaction going on until a discovery or an acceptance or a rejection of price is determined. And there is always going to be an opportunity for a rebalance. Okay? Rebalance means if one area of value is accepted or rejected, we must have price confirming that by rebalancing, retracing, or retesting. That's very important. Okay. So keep this in mind. We'll discuss this slide again in our next class. Now, the 3 steps to understanding the market, we are now going to enter into step 1. Okay, because I started this class by saying that I'm going to teach us 3 steps to understand the market or the movement. By the end of these 3 steps, you should be able to frame a trade by yourself on your own. And within that, we were getting some introduction, preparing ourselves to be able to understand those 3 steps. And we discussed the auction theory, and this is step 1. So, step 1, write it or take a screenshot of the slide. Establish who is in domination. This is the first thing you must do before you can set up your trade or frame your own trade. You must be able to understand who is in domination. If you look at the market, is it Gabriel that is in charge or it is Joe? Is it sellers that are in charge or it is buyers? Or they are both at the same range? Nobody is in charge. Is the market in an uptrend or downtrend? So to establish who is in charge, you must ask yourself, what is the trend? Okay?
Mm-hmm.
What is the trend? Now, for the trend, it is better to view the market or the trend from a top-down perspective. What this means is that you must look at the trend of the market from the most highest time frame. From the higher time frame, it is the footprint of the price movement that will help you to know the trend. So, for you to be able to also know the trend, the characteristics or the symbol